Micron Technology reported third quarter earnings June 26. Revenue beat consensus of 6.7 billion and was at the top end of the company guidance. The market sold off on the news by 7% despite the positive results, but at a forward PE of 56, we think Micron is fully priced and needs some consolidation at these levels. Revenue was above 6.8 billion, up 17% quarter over quarter and 82% year over year. Gross margins came in at 27%, better by 45% sequentially. The year over year comparison had a negative gross margin, a testament to how poorly Micron was performing a year ago and how much it has improved today. Operating profit was 719 million, up 276% quarter over quarter and 140% year over year, producing an operating margin of 10.6%. The bottom line was 332 million, down 58% quarter over quarter and up 117% year over year. In Q2 2024, Micron realized a tax benefit of 660 million, inflating earnings last quarter. Turning to the quarterly income statement bar chart, we can see the wilderness that Micron has recently emerged from. Starting in Q2 2023 to Q1 2024, Micron lost nearly $7 billion. AI demand will keep Micron on its current trajectory of profitability. Net revenue is down 2.6% on a quarterly compound basis from Q3 2022. Gross profits down 8.4%, operating profit down 15%, and net income almost 21%. Next quarter, however, should see these growth rates turn positive. Looking at the revenue by business unit, Compute and Network in blue generated nearly 2.6 billion in revenue, or about 38% of total sales, down from 3.9 billion or 45% in Q3 2022, growing by negative 4.5%, though year over year nearly doubling. Their mobile business in red reported almost 1.6 billion or 23% of revenue in this quarter, down from nearly 2 billion or 23% in Q3 2022. This unit has been contracting by 2.4%. Their embedded business reported 1.3 billion or 19% of revenue, shown here in yellow, down from 1.4 billion in Q3 2022. Embedded has been contracting by 114 basis points. The storage business is one of the bright spots for Micron. It has been growing by 10 basis points. Their solid-state drives, or SSDs, are in demand across artificial intelligence development and training. This segment grew 50% quarter over quarter, earning nearly 1.4 billion, though is only about 20% of total revenue. We'll be watching how much storage will contribute to the business in the future. Turning to revenue by technology, DRAM reported 4.7 billion or 69% of revenue, down from 6.3 billion or 72.6% in Q3 2022. Their NAND business has also contracted 113 basis points, though increased 20% quarter over quarter, close to 2.1 billion or 30% of revenue. Let's look at some ratios. Shares outstanding actually grew by 9 million. Our reports on a fully diluted basis, making our estimates conservative. Earnings per share was 30 cents, down 58% quarter over quarter and up 117% year over year. Sales per share were up to $6.10, better 16% sequentially and 77% year over year. Cash per share at $6.80, slightly lower. Book value not much change at $39.40. Micron has a P of 116, very high. The S&P 500 is 28.77. The debt ratio is just 0.19 and debt to equity is 0.29. Interest coverage is 4.8 times. The liquidity ratios look good, 3.4 for the current ratio, 2 for the quick, and 1.1 for cash. Return on assets, however, were just 2%, and return on equity only 3%. Return on capital employed, negative 3%. Return on invested capital, negative 3%. Some negative values are distorting these numbers, however. Cash flow data is based on 9 months. Operating cash flow was 5.1 billion, much improved from Q3 2023. Investing outflows were 4.7 billion. PP investment was $1 billion lower than the comparable period. Financing outflows were 1.4 billion, and free cash flow to the firm was down 18% to 7.7 billion, mostly due to Micron having issued 6.7 billion in debt, boosting last year's free cash flow. Micron pays a dividend of 11 cents, yielding 33 basis points with slightly negative growth because there's more shares outstanding. The payout ratio is 39%. The enterprise value of Micron is 159 billion. That is 5.8 times revenue, 12 times EBITDA, and 20.8 times free cash flow. Micron provided guidance for the quarter. They're expecting revenue to come in between 7.4 and 7.8 billion with a gross margin of 32.5 to 34.5%. Operating expenses to be between 1 billion and 1.4 billion with the earnings per share between 53 and 69 cents. Taking the midpoint of 61 cents annualized, that gives us a forward PE of 56. Micron is fully valued. Key takeaways are the solid revenue growth. Micron appears to be back on its feet, including improving margins and fundamentals. They have lots of cash. The AI revolution is going to see growth demand for their high bandwidth memory products. On the con side, the PE makes Micron expensive. Return on assets and return on equity are not very impressive. There are other companies that have higher returns with the same sort of risk. Micron is trading near all-time highs, and we are reluctant to buy at these prices. Despite Micron's position to reap the rewards of AI, we feel the share price needs a correction, so we're giving Micron a neutral. We have no exposure to this company. Like and subscribe.